Welcome back, everyone, to BlockDesk News. And today we're talking about the global news every single Monday, as always. And throughout the week, we do talk about other news such as AI, crypto, even the TCG market. And the point of our channel is to help you use the news to make good investments. So today there's a lot been going on over the weekend, especially. And by the way, thanks everyone who followed us on X. We've had quite a few followers actually been joining us. We are slowly growing, so thank you, by the way, before I start this video. But to get straight to the point, here's what happened. Late Saturday night, that's August the 1st, President Trump posted that the US was, in his words, locked and loaded to get ready, go to Iran, basically, I guess, strike them with more rockets. Ready to strike, basically. Reports said target was Iran's energy sites. Obviously, that's the big, I guess, agenda that they're pushing. And then he called it off. And this is the big this is just manipulation if I've ever seen it. It's a stock manipulation. There's obviously insider trading going on. This is my opinion. I'm not sure about this. I can't say I'm sure, but it looks like it. He said Iran and its neighbors asked the US to hold it off because, his words again, the parameters of a deal has been agreed to. What parameters? They're changing every day by the looks of it. And that's a narrow strait. You know, the Strait of Hormuz, like the deal he described will open the Strait of Hormuz. Basically, that's the main thing at the moment that he wants done. He wants that Strait of Hormuz to be completely open while he's attacking them. Like, make it make sense. And it would end the fight over Iran's nuclear program. So that's he's sort of saying, okay, I'll end the fight if you open the Strait of Hormuz, blah, blah, blah. Talks are supposed to start today on Monday. This is why we're talking about this. But here's the catch. Iran isn't confirming any of this. And they haven't confirmed so many things that he said. I'm sure whoever's been keeping up with this, Trump says something, they say no. They make a video on X, some AI video, where I'm sure you guys have seen it. It's ridiculous. So a semi-official Iran news agency called Trump's claim, quote, simply a new lie. So, the news agencies are saying this is a lie, these news. So one side says the deal is closed, the other says there is no deal. Remember, the war started in February. It's been since February. And it's been going on for months. And an AP poll last week found nearly 2 out of 3 Americans think it's not worth fighting. And I would say it's more because people are getting so tired of this, I hate wars personally, and of course there's money to be made in here. And that's what brings me into the point I'm making here, because there is money to be made. So why does this post on Saturday night move markets on a Monday, right? This is the big question. Because of oil, of course. Because oil is basically the big money maker in this particular war. The Strait of Hormuz, the moment, just think about it. The moment Trump says he's going to attack Iran, and he does, oil prices go up. The moment he calls it off, over this weekend, what happened? Oil prices dropped. So when people fear war near the Persian Gulf, which is where the Strait of Hormuz is, they fear oil getting cut off and the prices obviously going down. So they do. And if you take that fear away, the price falls. And it did fall. The US crude and American oil prices was trading around $80.44, down about 5% as late of Sunday to Monday. And I just checked it out today. It's at 79. It's dropping by $4 since Sunday, or $5 even, more. It's absolutely insane. And if you think there's no insider trading going on with this and his decisions, you would be wrong, I would assume. So that's the global oil price, and it dropped quite a lot. And as you can see, it's at 79. It was in its 80s early Sunday. And for oil did something nice to stocks. US stock futures ticked up Monday morning. So a fraction of 1% green across the board, which is good. A fraction of percent in the US stock market is a massive amount. Less war worries, cheaper energy, calmer markets just for today. So hopefully everyone's enjoying it. And that sort of shows the mood of the markets. And just if you're going to trade anything, trade oil, right? Obviously, not financial advice, but you can see every time Trump actually delivers a strike, what happens? Oil prices go up. If he cancels the strike, or there's good news about the war, or even if he says and the Iranians don't agree, even if he says there's an agreement, the oil prices go down. So if you're going to be trading something, trade stock. I guess that's the easiest option at the moment. And I hate trading based on war, but hey, this is the reality. This is what we bring you, the reality of trading. Now, a big drug deal is actually, well, no, a drug deal. Two big drug companies are considering a big merger. So the two of the biggest names in medicine, maybe you guys haven't even heard about them, but AstraZeneca, the British drug giant, and Bristol Myers Squibb, a big American one. So British and an American drug giants. So the Financial Times reported on Sunday, August the 2nd, that they've held a merger talk over the recent months. So it's still in the talking phase. But put that together, and you get a company worth close to $400 billion. So, for example, AstraZeneca alone is worth about $264 billion, and Bristol Myers is worth about $133 billion. So that would be one of the biggest large companies on the planet if this merger does go through. Now, nothing is signed. The FT says talks could fall apart, and big mergers like this are difficult to do. Neither company would comment at the moment about this, and that makes all sense. But this is what's blew my mind, guys. Investors were not thrilled. AstraZeneca London shares dropped around 6 to 7% just today on Monday. So why fall in front of a mega deal? Like, you would think it's the opposite, right? Because AstraZeneca has been the star, growing fast on its own, and some shareholders don't want it swallowing a slower rival, I guess. And in my opinion, this is a little bit weird, like a little bit of a weird position to have. So one thing, a deal this size, America plus British, would get picked apart by regulators in the US and the UK and Europe all at once. And this is what people like a little bit afraid about. So huge if true for them, and the market's first real vote is happening today is at trading. So you're seeing the market not really happy with it because regulations always mess things up. And we're going to talk about regulations on the crypto segment this week, actually. So make sure you subscribe and you follow us on anywhere, on X, on Twitter, on Instagram. And we bring these short news coverages. Our videos aren't long, just to give you exactly what you're looking for. So that's one giant deal. And hopefully we're going to basically, we'll keep you up to date with it and we'll see how it goes. And it'll be a good trading opportunity because if the merger does go through and the regulations don't have a big impact, this will basically create a new stock and it'll be pretty massive for any holder at the moment, and might be a good time to buy because of all these panic sellers, right? Now, moving on, while everybody is watching Iran, people have missed that there was a big deadline that passed Saturday, August the 1st. Also, this Saturday was pretty big. Was the day Trump's new tariffs kicked in, guys. I'm sure you remember all this big talk about Trump's tariffs. And just a quicker reminder for those of you who don't know, a tariff is a tax on stuff coming into the country, basically import tax, right? The importer pays it, and usually some of that lands on you on the till, right? So you are paying for it at the end of the day, right? And these are big. So for those of you who don't know, Canada is 35%, Brazil is 50%. The European Union and Mexico, 30%. Japan and South Korea, 25%. Interesting to see South Korea get a really small percentage, I would assume because of Samsung. And Samsung is probably a company you should be looking for. I know the Korean market has been absolutely atrocious, but it's definitely worth keeping an eye out for. We won't be covering it too much today, but if you got any questions or you want me to cover the South Korean market, just comment down below and I'll cover it in a video for you. So some countries actually managed to dodge the most of it. The White House says it struck deals with the UK, Vietnam, and Indonesia, plus an early framework with China. Interestingly enough, right? But for once without a deal, those taxes are now live as of this weekend. The reason this matters, this is an important part, For calm looking Monday, tariffs are a slow burn. So the results of tariffs is going to be, you're going to see them slowly. They don't crash the market in a day. They show up later in prices, in company profits, and inflation. So markets are relieved about Iran today, right? That's what you're seeing. While quietly carrying a fresh tax on trade underneath it all, right? So you might potentially see a slow burn because of this, which brings us to the number that could tip the whole mood on Friday. So this Friday it's going to be a really big one. August the 7th, the US puts its July jobs report. It's the single most watched number in the markets. So the jobs report on Friday, USA jobs report. July. There we go. July 2026. Why is it not coming up with the right report for us? All right, guys. So look, it's the single most watched number in the markets. Like the markets really do follow these job reports data. I was on the right website. My apologies, people. So as lately, it hasn't been strong, right? So the last report on June's numbers released back in July, the 2nd, showed just 57,000 jobs added. That was the weakest in 4 months, so it wasn't a good. This is why you've seen the markets being pretty rocky over the past month. So for this Friday, forecasters are expecting around 83,000 jobs with unemployment near 4.3%. Here's why you should basically care about this. A weak job number pushes the Federal Reserve, American central banks, closer to cutting interest rates. Lower interest rates tend to lift stocks. But a weak number also whispers that the economy is cooling, and now there's a fresh tariff in the mix too. So potentially we could see even more downfall. And as we've all been talking, October seems to be when the markets are going to be easing off, and potentially these job reports aren't going to be good this Friday. So Friday is the tell-all. We're going to keep you all updated on X most likely, and we're going to discuss it on Monday because over the weekend we'll see exactly how that affects the whole market. So keep your eye out for this. This is going to be one of the biggest news this Friday, the USA job reports. That's how the markets are going to react. For today, we don't have any stock picks for you. I didn't really want to pick any stocks in such a crucial time, but we might have a crypto pick, and we're definitely going to have a trading card pick for you this week, which is most likely going to be on Wednesday. So thank you for today. This has been Edward, your host for BlockDesk News. That's it for the stock section and basically the global market news for today. All the best, guys. Bye-bye.